Hello, and thank you for joining us today for this Edward Jones webinar, Protecting Yourself from Fraud. My name is Sandy Miller. Before we get going, let me highlight a few of the features on your screen that we're going to be using. On your screen right now, you should already see a video window with me inside. There should be another window with our presentation slides and a third window for our Q&A feature. If for some reason you have any difficulty during the program, you can click on the help icon at the bottom of your screen. That's the black question mark inside the yellow circle. This is for any technical questions you may have. For those watching live, we also have a team on standby ready to assist you if at any time during our discussion you have a question or would like clarification on a point. Just click on the Q&A icon, which is the third button from the left at the bottom of your screen. That will allow you to send in your questions. We will do our best to answer your questions in the allotted time we're given. If your question is not answered, please follow up with your Edward Jones financial advisor. If you do not have an Edward Jones financial advisor, please click on the Find an FA widget below. We also have a lot of helpful resources and information available for you inside the Resources icon, which is located next to the Q&A icon. And for those who wish to utilize it, closed captioning is available and can be turned on or off at any time during this webinar by clicking on the closed captioning icon. All right, now that you know your way around, let's get started. October is Cybersecurity Awareness Month. Everyone has seen the stats, heard of the astronomical cost of victims, and read the headlines featuring the scams that happen to innocent people online every day. And while no one is immune from becoming a victim of a cyber attack, there are several things you can do to make sure yourself and your assets are less vulnerable to these schemes. Joining us for today's webinar are Edward Jones Senior Strategist Megan Dow, Edward Jones Chief Privacy Officer Patrick Chavez, and Edward Jones Financial Advisor Travis Lois. And thank you all for joining me today. Patrick, could you begin with an explanation of what cybersecurity is and how that relates to fraud?
Sure, Sandy. There are really many ways to define cybersecurity, but ultimately, it's the practice of trying to reduce the risk of cyber attacks. Both individuals and organizations can engage in cybersecurity, but it's generally not one single thing that someone does, but rather a series of systems, processes, technologies, and practices that can create layers of security to help protect an individual's private information. For an individual, this means having good password hygiene, having multi-factor authentication on important accounts, using strong privacy settings online, avoiding the use of public Wi-Fi, considering whether a credit freeze is right, and keeping your software up to date. Individually, all these are good activities, but the impact of layering these multiple strategies together is how you really enhance your protection.
So how does cybersecurity relate to fraud?
Well, fraud existed long before technology and cyber attacks, but the advancement of technology has created additional and sometimes easier ways for scammers to try to get valuable information or access to your money.
All right, thanks so much for that explanation, Patrick. Now, you mentioned organizations can engage in cybersecurity. With that in mind, many clients want to know, what steps does Edward Jones take to help protect them from cyber attacks?
It's a great question, Sandy. And we take the security of a person's information seriously and have a number of measures in place to protect that data, including personal service. Your financial advisor and branch office administrator know you and the activity taking place on your accounts. This personal service helps to protect your financial information. Privacy. In the privacy program, we share your personal information only with companies with which we have a relationship in order to better enhance your Edward Jones experience. We don't sell or provide your information to allow other companies to market their products to you. Vendor evaluations. We perform extensive evaluations on the companies with which we share clients' personal information. Fraud prevention. We implement industry standard firewalls, encryption, and detection capabilities. System tests. We test our security systems regularly and take the necessary steps to address potential issues. And expert assistance. We consult with security firms to identify potential vulnerabilities and our security training. Our employees train continuously on how to safeguard client information.
Thanks for that information, Patrick. Instances of fraud seem to be growing more and more common with each passing day. Megan, is that a perception or a fact?
I was surprised when I looked into this. The short answer is that it is becoming more common, but the scale by which fraud is increasing, frankly, shocked me. The most recent data from the FTC showed that consumers reported losing nearly $8.8 billion to fraud in 2022. And that was an increase of more than 30% over the previous year. Now, one myth I want to dispel is around who's susceptible to fraud. Many people I've talked to have a certain image of who falls victim to fraud, with older adults being stereotypical victims, but the data suggests otherwise. In fact, younger generations are more likely to be the victim of fraud. In 2021, they were 34% more likely than older adults to report losing money to fraud. Now, that said, older adults that were victims of fraud lost more money on average than younger adults. Median reported loss of those 80 or older was 3 times that of adults aged 18 to 59. So younger adults are more likely to be the victims of scams, while older adults lose more money. So regardless of who you are, scammers are exceptionally good at using human behavior to exploit vulnerabilities. They'll tailor their methods to their target. For younger generations, that might mean using text, social media, emails. For scams that center around student loans or online shopping or employment. While for older generations, it might sound like a phone call about taxes, healthcare, or Social Security. The takeaway here is we want everyone to be on alert. You, your parents or grandparents, and your kids or grandkids.
Megan, thank you. That shows how truly widespread and common these types of schemes have become. Travis, you work with clients every day. How is this coming up in your conversations and the work you do to serve clients?
Hey, Sandy, 2 thoughts come to mind. Number one, no one ever thinks it's going to happen to them. Many times we hear these stories about various scams and they sound so silly that we discount it as something that won't happen or certainly wouldn't happen to me. But I've seen something as simple as loneliness make somebody susceptible to abuse they never would have imagined falling for. The second, we have established processes in working with our clients to help prevent these things from happening. Things like verbal confirmation before we execute trades or transfers, adding trusted contacts, and simply working to really get to know and understand our clients so that we can be watchful for things that might be out of the ordinary.
While it's become more difficult to truly spot fraud in an online setting, there are some common red flags or warning signs that people should be on the lookout for. Megan, tell us more about those indicators.
There are dozens of different forms of fraud, and scammers are finding new tricks all the time. So while we do want you to know the common forms of fraud, it's also helpful to know certain red flags. I'm going to talk through 5 of these that should prompt you to tread more carefully. Let's start with if you didn't make contact first. Now, that's not to say every message or phone call you don't expect is from a scammer, but it should put you on higher alert. One thing to keep in mind is you can't necessarily trust email addresses or phone numbers to determine who someone is. Scammers can do what's called spoofing to make their message or phone call look like it's coming from a legitimate source. So just because something looks legitimate doesn't necessarily mean that it is. Now, second, you might want to be more skeptical if there's an emergency or a prize. Emergencies might sound like having an issue with the IRS or Social Security Administration, a family member being in trouble, or having a security issue with your computer. Prizes, on the other hand, are often in the form of lottery or sweepstakes winnings. Third, scammers will often convey a sense of urgency or that pressure to act now. They don't want you to slow down and think more critically, and they certainly don't want you checking in with a trusted friend or family member. Oftentimes, if you're on the phone, they'll try to make sure you don't hang up. That should cause alarm. Fourth red flag is when there's an ask for personal information or money. Personal information can be anything about you: your address, birthday, account number, social security number, username, password, if you have multi-factor authentication set up, an authentication code. All of this information can be used for identity and other forms of fraud and theft. And then lastly, it should raise your suspicions if you're asked to send money, especially if there's a specific form of payment that's requested. Never send money to get money. And if you're asked to send money through a prepaid gift card or cryptocurrency, or to wire money or use a payment app like Venmo or Zelle, Keep in mind, those are forms of payment that are harder, if not impossible, to get back. Now, the more red flags like this that you encounter in a given situation, the more caution you should exercise in your interaction.
It's certainly helpful to know what to look for when fraud is suspected. Thank you so much, Megan. Patrick, what are the most common forms of fraud? Or more specifically, what are some common types of fraud encountered by Edward Jones clients?
Well, there are certain types of fraud that we see more often with our clients. 5 of the more common forms are romance scams, investment scams, sweepstakes or lottery scams, tech support scams, and imposter scams. We want to build awareness around these to hopefully put you on guard against them for yourself and for your loved ones.
To that end, I'd like to discuss in more detail each of those 5 types of fraud. Would each of you mind giving us a more thorough explanation?
Sure. I'll start with romance scams. Romance scams are when someone misrepresents themselves, often online, as a potential romantic partner. Their profile and picture are faked, but intentionally chosen to make themselves seem like a better match for you. They spend time building the relationship, and once a bond is developed, and that bond can happen quickly or over time, but once that bond develops, you'll get a request for funds, usually with a promise to pay you back. They might ask you for help with a family emergency, to cover taxes or business expenses, or even to be able to afford travel to come meet you. If money is sent, additional requests will follow, sometimes amounting to as much as tens of thousands of dollars. Romance scams are particularly tricky because they're the result of an emotional relationship that someone's fraudulently cultivated. If you're the one being scammed, it can be really painful to experience that betrayal. And when you're worried about a loved one, your loved one might be particularly resistant to information that suggests they're being scammed by someone that they feel emotionally connected to. Some of the best practices we'd suggest include never sending money to someone based solely on an online relationship. Funds sent in connection with romance scams aren't recoverable, especially because the funds requested are usually in the form of gift cards or through a payment app, and those have lower fraud protections, if any. So be skeptical of claims made by someone met online, especially if they make quick declarations of love or close feelings. And please confide in a friend or family if suspicions arise with an online relationship. A neutral party is often in a better position to determine if the other person is a scammer.
I'll tackle the second and third, investment scams and the sweepstakes and lottery scams. So investment scams are scams where someone tricks you into giving them money by promising substantial returns. Scammers might promise that you'll make money quickly or you'll get big payouts. One type of investment scam that's becoming more prevalent is cryptocurrency scams. These are really appealing to scammers because cryptocurrency payments aren't reversible. They don't come with protection. Once the client sends cryptocurrency, they can't get it back unless the person who received the payment chooses to send it back. Be wary of an investment company that only communicates with clients online through messaging apps or text message, as well as one who guarantees returns and makes big promises. A false sense of urgency, for instance, to get in on the investment, should be met with healthy skepticism. And beware of anyone guaranteeing a return or the investment performance of cryptocurrency or asking for payment in cryptocurrency. Now, for a sweepstakes or lottery scam, you might get a call, a letter, or an email about winning fake lottery or sweepstakes winnings. The notice will often be accompanied by a request for your personal information or for taxes or fees to be paid on the alleged jackpot. In some cases, a check may even be included to cover the amount said to be owed. A deadline for responding is often included in an attempt to create that sense of urgency. To avoid these, keep in mind, no legitimate lottery will ask for funds to be paid before winnings are distributed. Don't deposit any check that was issued to cover taxes or fees related to the alleged prize. That check is counterfeit, and any funds sent will be lost when the check is returned. A good rule of thumb for both investment and lottery scams is that if something sounds too good to be true, it probably is.
And that leaves the tech support scams and imposter scams. Tech support scams typically occur when you get a phone call or a pop-up box that suggests your computer has an urgent security issue or threat that needs to be fixed. The scammer may impersonate companies like Apple, Microsoft, or Norton. They may ask for remote access to diagnose the problem and typically ask for payment information to fix the issue. Another trend we're seeing is that the scammer will use the access they've been given to someone's computer to determine where financial accounts are held, and then they'll impersonate that financial company to gain access to the funds. For example, if they determine that a person has an Edward Jones account, they'll call that individual back, say they're from the Edward Jones Fraud Department, claim the client's account has been compromised, and tell the client that they need to move the money out of the account to help catch the criminal. Scammers have even stated the financial advisor is the perpetrator, likely to prevent that client from reaching out to that trusted financial advisor, which would ultimately uncover the scam. Ignore unsolicited phone calls and messages from anyone claiming to work for a brand name tech company. If you get a pop-up box about a virus or malware, proceed with caution. Be especially careful if there are typos or poor grammar, or you're asked to urgently call a phone number or click a link to address the threat. No legitimate company will ask for payment via a gift card, cash reload card, or a wire transfer. And then finally, there are the imposter scams. Now, these can vary a lot, but the common element is someone posing as another person that you'd trust to get information or money. It can be someone impersonating a representative from a government agency like the IRS, Social Security, or Medicare, but it also includes people posing as representatives from companies you have a relationship with, or even a family member, such as in the grandparent scam. The FTC advises being suspicious of any call from a government agency asking for money or information. Not trusting caller ID because that can be faked or spoofed, and never paying with a gift card or wire transfer. A couple of additional points related to two common forms of imposter scams, those about Social Security and taxes. The Social Security Administration will never suspend your Social Security number, threaten you with arrest or legal action because you don't agree to pay money immediately. They won't claim to need your personal information or payment to activate a cost of living adjustment or other benefit increase. And they won't pressure you to take immediate action, including the sharing of personal information. These are all red flags for a scam. And now when it comes to the IRS, they will never text or email you about a tax bill or refund. Most contact from the IRS is initiated through regular mail. So also be cautious about any calls from the IRS demanding immediate payment. They will never specify a payment method like a gift card or a wire transfer, and they won't threaten to immediately have any taxpayer arrested for non-paying. They won't call unexpectedly about a tax refund either. Setting up an account on irs.gov can be a helpful source for verifying any information about taxes owed or refunds due.
There's truly no limit to who cyber fraud can impact. So Travis, what are the preventative measures that can be taken between financial advisors and clients to help provide protection against these scams?
Well, first and foremost is the relationship I develop with my clients. I get to know them. I get to know what their plans are for the funds that we invest together, and they have to talk to me if they want to place a trade. This means I'm better positioned to be able to identify if there's an unusual request to distribute funds. If something unusual does come up, it's helpful for me if the client has a trusted contact set up, which is why I encourage one for every client. A trusted contact has no legal authority over your account, meaning they can't transact business or give trade instructions or request funds, but it's somebody that we can contact if we've been unable to reach you after several attempts and we're worried you might be subject to potential fraud or exploitation. It can be anybody you trust, a friend, a neighbor, as long as they're at least 18 years old. Taking some time for this on the front end can really end up saving you a headache in the longer run.
Preventative measures are great ways to keep yourself safe from cyber fraud. But what if one suspects that they or a loved one has already been a victim? What are the actions that should be taken?
So the first thing we want to acknowledge is how vulnerable this can make someone feel, and that many victims struggle with feelings of embarrassment or shame that they should have known better. This can make them less likely to report the fraud and seek help and support. So if you're dealing with a loved one, I'd advise being empathetic and understanding, especially at that stage of helping them understand they may have been the victim of fraud. This realization can be a painful one to have, so be as delicate and patient as you can. If you're dealing with this yourself, I want to go back to a point I made earlier. Scammers are really good at what they do. Almost everyone has some vulnerability that can be exploited, so give yourself some grace and understanding. It's not your fault.
It's really important to start by reporting the fraud, which might include filing a police report, reporting it to the FTC online at reportfraud.ftc.gov, reporting it to the FBI at ic3.gov, or reporting it to your state attorney general. Now, if your Social Security number has been used fraudulently, you can call the Social Security Administration's fraud hotline at 800-269-0271. And if it's identity theft, you can report that to the FTC at identitytheft.gov and use the FTC's Identity Theft Recovery Guide at identitytheft.gov/steps. This comprehensive guide covers steps such as reporting the identity theft, placing a fraud alert or credit freeze on your credit reports, contesting bogus charges, and stopping debt collectors from trying to collect debts you don't owe. Lastly, we'd ask that you contact your financial advisor, who can work with you to help protect your Edward Jones accounts. This could also include taking advantage of the enhanced security features with our online access service, such as setting up two-factor authentication or getting notified if your username or password is changed, or if your username becomes locked because of too many failed password attempts.
Before we wrap things up for today's webinar, any final thoughts or advice for our audience?
I really just want to say thanks for joining us today to learn more about this topic. Knowing what to look out for and having that healthy dose of skepticism can help protect you and your loved ones from bad actors and scams. So thank you for taking the time to build up or just refresh your familiarity with some of these techniques.
I'd also like to thank everyone for engaging in this topic. It doesn't have to be hard to protect your information, and awareness of the potential threats can go a long way. Taking some simple steps can be incredibly beneficial, and the more diligence and effort someone puts into safeguarding and protecting their information, the bigger the security payoff.
I would simply say, don't be afraid to ask your financial advisor. I'm sure that we've all had that experience of being at the doctor and having to ask an embarrassing question or have an uncomfortable conversation. But at the end of the day, doing that was the right decision for your health. If you or a loved one is dealing with something that just doesn't feel right, talk to your financial advisor. It may be embarrassing. It may be a little uncomfortable, but it's the best thing for your financial health and well-being.
Thank you all for joining us today and for sharing all of this valuable insight. As I mentioned earlier, we have several resources that we hope will help you during this time. Be sure to check them out by going to the resource icon on your screen. We're now going to start the Q&A portion of the program. We have a team of subject matter experts waiting online to answer your questions through the Q&A widget. Please remember that there will not be any video during this portion. You will only see a slide prompting you that the Q&A is now in session. Rest assured, the webinar is still live. We will do our best to answer your questions during the allotted time. If your question is not answered, please follow up with your Edward Jones financial advisor. If you do not have an Edward Jones financial advisor, please click on the Find an FA widget below. I also want to remind you that this broadcast will be available again on demand using the same link you used to register for today's program. Please note our upcoming webinar as well. Thanks again for joining us, and please enjoy the rest of your day.